Hello and welcome to the Business Standard Morning Show. I'm Veenu Sandhu. Let us take a look at the stories for the day. The RBI recently superseded the boards of Srei Infrastructure Finance and Srei Equipment Finance. The firms will now be taken up for insolvency proceedings. While the situation is still developing, we'll look into the family behind the business and how the crisis unfolded.
The owners of Srei Infrastructure are Kolkata-based Kanorias. The family has put in place a holding structure whereby all its companies are held by a trust, the Kanoria Foundation. The foundation's trustees include the family patriarch, H.P. Kanoria, and his four sons, Hemant, Sanjeev, Sunil, and Sujit. The Kanorias have business interests that span across finance, power, education, technology, media, and healthcare. Last reported in 2017, the Kanoria Foundation's asset base was worth about $10 billion. There are three major listed companies that are held by the trust. These are Srei Infrastructure, which is the financial services vertical, India Power, which is the power sector arm, and Srei Infrastructure Development, which is a housing and hospitality venture. Srei Infrastructure is the holding company of Srei Equipment Finance. Hemant Kanoria is the chairman and managing director of Srei Infrastructure, while Sunil Kanoria is the company's vice chairman. Sanjeev Kanoria is a doctor by profession and runs a healthcare venture in the UK. And Sujit Kanoria is the MD of Srishti Hotel. Now we go to Business Standard's Ishita Ayan Dutt for more details about the family and its business interests.
Some years back, the Kanorias formulated a holding structure whereby all companies are held by a trust, the Kanoria Foundation. It's like an umbrella for different entities. For instance, Srei is into real estate and hospitality. Sahaj is a rural digital commerce company. Quipo is into rentals and leasing of infrastructure equipments. And there is India Power. But for the last 10 months, the Kanorias have been completely consumed by problems at Srei. In the last 4 to 5 years, Srei started moving away from infrastructure financing and focusing more on equipment financing, even though disbursements under that wing too were lower, according to lenders. But it was the COVID-19 pandemic that aggravated Srei's problems. On Monday, though Srei hinted at legal recourse after the RBI move, it remains to be seen whether they will put up a fight or move on with their other businesses.
Thank you, Ishita. Srei has a total outstanding debt of Rs 30,000 crore. Of this, up to Rs 20,000 crore is with 15 commercial banks, which include State Bank of India, Axis Bank, and UCO Bank, among others.
Market regulator SEBI has approved guidelines for setting up a spot gold exchange. The move will help bring a transparent price discovery mechanism besides creating liquidity for retail investors. Let us look at how the exchange would work and how it compares with other gold instruments.
The Securities and Exchange Board of India approved guidelines for spot gold exchanges at its board meeting on September 28. The benefits of such an exchange, according to a SEBI statement, would include efficient price discovery, liquidity, and assurance in the quality of gold. It is also expected to create a national pricing structure for gold. Despite being the world's second biggest gold consumer, India currently allows trading only in gold futures. The new gold exchange will compete with sovereign gold bonds, gold ETFs, and digital gold. Firstly, let us see how the gold exchange would work. The instruments representing gold that will be traded on the exchange will be called electronic gold receipts or EGRs. Any recognized stock exchange is allowed to launch trading in EGRs in a separate segment. EGR is initially created when physical gold is deposited with vault managers after assuring the quality of the gold. They are credited to the demat account of the beneficiary. EGRs can be held for as long as intended since they carry perpetual validity. And finally, an EGR holder can withdraw the underlying gold from the vaults by surrendering the EGRs. Now, what should investors keep in mind about gold exchanges? Let's talk to independent market analyst Ambarish Baliga to understand.
First of all, not all EGRs can be exchanged for physical gold. It would be only those cumulatively holding 50 grams or more of EGRs. And also there's a cost of conversion which the holder will have to pay. Secondly, though EGRs can be held indefinitely without conversion, there is a cost of safe storage charged by the vault manager, and that cost could be higher than what one would be paying possibly for a bank locker. And last but not the least, the investor will have to pay brokerage and STT while trading in EGRs, and will also have to pay GST while converting the EGR to physical gold.
We also have with us Sudhish Nambiar, Head of India Gold Policy Center at IIM Ahmedabad. He explains the implications of the new systems and how EGRs compare with other gold instruments.
SREI's approval from the SEBI board was music to ears for most in the trade, given that it's been something, a development that's been long looked for. That's kind of incentive structure is what is being aimed to build through a exchange type mechanism, where one would want to follow a quite a compliance structure, want to be part of an ecosystem that promotes trade in a more progressive basis. So that's one component, and the other would be the transparent pricing. So currently, is more of a bilateral trade that happens in the market. The bilateral trade and the pricing will be varying from city to city. It can vary. Various associations have various prices. So this is where, again, the spot exchange is going to play a critical role. And while we do that, it also provides a significant logistical convenience for the traders, and for the jewelry manufacturers across the spectrum, across the value chain. We try to invest in gold, sovereign gold bonds, or the ETFs, or the digital gold. Now, somebody wants to buy something like 5 grams of gold. They want to accumulate it over a period of time. So this again makes a platform for accumulating gold through the spot exchange and taking delivery at the time what they want. So, for instance, if you look at ETFs, you have the NAV price. Then and if you're looking at sovereign gold bond, typically during the primary issue time is where most of them would be buying it. And digital gold is the only platform where you get to buy it 24/7. But then on the digital gold, we are not sure who is actually holding those gold, where it is being held, because it's not working through a regulated environment. So it's quite possible that something like digital gold can also shift into may also use the electronic gold receipt as the primary backing of the gold that investors are buying. So that's quite possible. It might happen that way, and which actually goes on to provide good trust among investors that, see, I'm having my gold bought through this digital gold platform, which is being managed by a vault that is regulated by SEBI. When you're buying gold, you actually do not know what actually is the price. What is the market determined price? There's a landed price, and over which there's a premiums that gets added on. One would eventually try to pay something like 4 to 5% over the landed price. But most of the consumers, most of the investors do not understand why they are paying. So through a market determined, transparently discovered prices is where they get to participate, which is a big advantage for the investors. Because ETFs again is is treated as securities, and sovereign gold bond that has its own benefits. If you look at, because anyway, say government issued, and there's a good tax benefit that is being given on that front. In addition to it, you have 2.5% that you earn on sovereign gold bond. So we can't be directly comparing with sovereign gold bond. Just the fact that in this case you have a physical gold that is actually being held against the electronic receipt, whereas sovereign gold bond you don't have a physical gold. It's just the trust on the sovereign on which you are buying the bond. So that's it. So ETFs again, it's like if ETFs are treated like securities, the same way the EGRs are securities. So the similar tax structure is what would apply in both the cases. And there's more liquidity. Further to that, there's price through the day. It's not just one price in a day.
Amid volatility in the global markets, the focus will now shift to the RBI's 3-day monetary policy review meeting that begins today. Watch this report to know the issues that will guide the market.
Markets are expected to remain choppy today amid nervousness in the global markets. Commodity prices, led by oil, have risen sharply due to supply shortages. Brent crude futures are hovering around the $82 per barrel mark, putting pressure on the rupee. The domestic currency hit a 6-week low of 74.64 per US dollar yesterday before settling at 74.44. Overall, plateauing growth, inflation worries, stronger dollar, and hawkish tone by central banks are keeping global markets wobbly. Back home, the Reserve Bank of India's 3-day policy meeting, which is set to begin later today, will be on investors' radar. While economists and bond market participants do not expect the Monetary Policy Committee to change its accommodative stance or the repo rate, they will keenly look for hints on policy normalization, starting with the removal of excess liquidity. Given this, movement in bond yields may also sway the market trajectory. That apart, stock-specific news flow, updates on COVID-19 vaccination, and foreign fund flow will guide investor sentiment. Yesterday, the benchmark indices witnessed a sudden spurt in the later half of the session and reversed their morning losses. The frontline S&P BSE Sensex bounced back over 600 points from the day's low to close 446 points higher at 59,745. The broader Nifty 50, on the other hand, ended the day above the 17,800 mark at 17,822, which is up 131 points. Meanwhile, the BSE mid-cap and small-cap indices closed 0.3% and 0.5% higher than their respective the previous day's close.
From mythical creatures to a regular feature in business and financial discussions, unicorns certainly have come a long way. These days, we hear the term unicorn used so very often for startups that are doing very well. In fact, we also hear of decacorns and hectocorns. So what are unicorns in the startup universe, and can only startups become unicorns? Let us decode.
Do you know even the likes of McDonald's and Ford Motors began as startups? In its latest outlook on the state of the economy, the Reserve Bank said that the year 2021 could turn out to be India's year of IPOs, with the domestic unicorns setting domestic stock markets on fire and global investors in a frenzy through their public issues. It is something great to hear, isn't it? But do you know what it means to be a unicorn? Well, in venture capital, the word refers to any startup that had reached the valuation of $1 billion. It was Aileen Lee, founder of Cowboy Ventures, who for the very first time used this word in 2013 to emphasize the rarity of such startups. Since then, business leaders and publications have used this term quite liberally to write on or discuss startups. To be a unicorn, however, is no cakewalk. The term is associated with some companies that have changed the rules of the game with their innovative solutions and concepts and, of course, business models. To name a few, just think of Uber, which changed the way people traveled, or Paytm, which made the life of a common man easier with bill payments and bookings on their fingertips. Airbnb changed the way people planned their stay while traveling. So the key features of a unicorn is their novelty in the proposal and the potential to disrupt the market, besides their being high on tech. The common question that people ask is, can only a startup be a unicorn? Yes, the term is for startups that have a valuation of over $1 billion, and startups that exceed the valuation of $10 billion are called decacorns. The entities with over $100 billion valuation are hectocorns. So, currently, how many unicorns does India have? The RBI in its August 2021 bulletin said it is estimated that India has 100 unicorns, with 10 new ones created in 2019 and 13 in 2020, in spite of the pandemic, and 3 per month in 2021 so far. According to US-based analytics platform CB Insights database, however, out of a total of 642 unicorns around the world, India had 29 as of April 2021. The variation in number may be on account of how a startup is counted as a unicorn and at what point it is phased out of the list. Now, is being unicorn an achievement? It is surely a maker for a company in its growth story, but one can argue whether it's major achievement or not. The reason is that there's nothing real about a startup valuation. It's a notional value depending on the cash flow availability, ambition, and assessment of the key investors funding and backing a startup. Since this valuation has nothing to do with revenues, profits, or any other benchmark used in any traditional business, it's something of a sentiment-driven play by investors. So, it is not necessary that every unicorn will end up being a super successful startup.
And that's all we have for the day today. We will be back tomorrow morning with more news and analysis. Stay tuned and thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.